Hi, this is disability lawyer David Brannon. I'm going to answer a question that I got recently. With CPP disability, you can earn up to $6,100 before you have to report it to Service Canada. What this person wanted to know is, I'm a self-employed person. My revenue is more than $6,100, but when you apply the expenses that I have for the business, it puts the income, the net income at the end of the day is below $6,100. So that person wanted to know, do I have to report this to Service Canada? So we're going to answer that question in this video. And again, if you like it, we'd love it if you could hit that like button, subscribe to the channel, and leave us your comments below. We'd love to engage with you and answer any more questions you have or clarifications about this. You're self-employed, you're earning more revenue than $6,100, but once you put in all your expenses and things, it brings the total business net income below $6,100. Do you have an obligation to report that to Service Canada? I guess it goes without saying that you can do some work up to $6,100 actually and earn income of up to $6,100 before Service Canada even really looks at it and makes any considerations. If your income is between $6,100 and $16,934 in 2021, that is the discretionary zone, where up to $16,934 and above $6,100, Service Canada has discretion to allow you to keep the employment income and the CPP disability income. Once your income goes over $16,934, there's no discretion. They will cut you off, okay? They don't have any discretion at that point, unless you're in an approved rehabilitation program. But I'm kind of getting off track here. So let's get back to the main question here. This person wants to know, like, is it net income? Is it gross income? My suggestion to you is, if your gross income is more than $6,100, 100% report it to Service Canada. You can then explain to them, here's my deductions, here's my net income at the end of the day, but you should be reporting the $6,100 gross income, in my opinion, to just cover yourself. Show them what their expenses are, maybe even give them the tax return that shows your statement of business income and expenses and things like that, and let them have some comfort with it. The danger here, and why I think Service Canada would take issue with this, is people can be creative with expenses and can overstate expenses, and there will be some pressure on you to maybe do some creative bookkeeping, which you should definitely not do. And also, just because you have expenses that are bringing the revenue down, the whole point here is that Revenue Canada is not so concerned about what your actual earnings are. They're more concerned about, well, I guess they are, but at the end of the day, though, they're really more concerned about your capacity to work. So if you have a business that's generating, $30,000 in revenue, but you have expenses of $25,000, and so your take-home pay at the end is $5,000. I think Service Canada is going to want to know that you're able to earn that kind of money, because again, you could be, what are these expenses? Maybe you're paying employees. Like, there's a bunch of ways you could be manipulating this to make it look like you're earning less money than you actually are. And so they're more concerned about your capacity to work. So as soon as they see you have the capacity to run a business that generates that kind of income, they're going to wonder, well, couldn't you go just get a job somewhere and earn above $16,000? So you need to be very, very careful here, and you should not be creative at all with it. You need to start reporting to them as soon as your revenue crosses the $6,100, in my opinion. And be very careful here, because they're not looking at technicalities that, like I said, you've got your business earns $100,000, but your expenses are $95,000. Therefore, you're only getting an net. See how this could go to be absurd here? Your net income is only $5,000, therefore you didn't have to report it. I don't think that's going to fly. In fact, I know that's not going to fly. You need to start reporting it when you cross $6,100 and explain to them what their expenses are and make sure that they accept those as expenses. But beware. The higher you go up on self-employment, you could be demonstrating that you have the capacity to work, which is not a bad thing. But you are going to have to approach it the right way with them. And if you are working towards hopefully increasing, get yourself put into an approved rehabilitation program with them, where they'll allow you to go for it and not jeopardize your income. When you're in an approved rehabilitation program, that's one of the few times where they'll keep paying you and you can earn more and you don't have to worry about it, because they're going to try to help you move back into a full-time paid or part-time paid job that would eventually bring you outside of CPP disability, but it has to be in an approved program, so make sure you do that. All right, that's all for now. I hope you enjoy this video. Take care, and we'll see you back here next time.